All right. All right. Hola, guys. Que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. Let's continue from yesterday's video a little bit. This video, which hopefully will be shorter, I want to focus on fractal range analysis of where we are and where I think we're going. So if you've been following my videos, you know we have these two charts up here. The chart on the left, this one here is the overarching structure of Bitcoin on the macro. I believe I had, okay, it's a 4-hour. I had it on an 8-hour earlier. I've reduced the time frame so we can get more of a spread. We could see more of the spread. And then what I did was I put these liquidity void zones down here and labeled them where basically the feasibility of the price action touching. This first one, I think we've already mitigated 92 or 92.3 or thereabouts. So this has already been struck, this very likely. So that's a done deal. The question remains is, are we going to continue to redistribute from here to the next liquidity void, which is underneath the preliminary supply zone? This one here, which is likely, and I'm going to show you why it's likely. And if we do reach that area, that could be an area of reconsolidation where Bitcoin goes into passivity and latency. And you all know what that means. That means high probability of altcoin season firing back up. So we basically want Bitcoin to hit this area here. Not only does it provide very good buying opportunities for Bitcoin and entering in, but it also spurs the alts on to fly, and so we can make money swinging the alts. So I love doing that. And then there, depending on what we do here, what the price action does, we'll look at it on the VSA. If we ever get down to this area, we could likely head to an even further liquidity zone, and this would be the $76,000, $75,000 area, which is certainly possible. Also, we can't rule anything out, although I don't see actual full-bodied candles reaching that low, although it could be. I see us going back down there eventually, just not in this this particular distribution cycle. Now, there's a possibility we could flash wick this area. So if we do start retracing underneath 84 or 80, I think 80 is the 618 retracement. I think the golden retracement from this. I may be wrong, from this distribution top. Anything under 80, if we start breaking down under that, I would definitely put limit buys in the 76 area, 76K, 75K, upper 75K, and who knows, you might be able to pick up some Bitcoin, $70,000, $75,000 Bitcoin. How cool would that be? And then we have this other. Now this would be 30%. This would be a 30% drop, which is feasible. Underneath this area here, this is now we're in the 60s. I don't really see us going down that low for this cycle. What I do see is kind of like what happened, echoing more or less what happened in 2021, where we had that where we fell underneath to the second liquidity zone area, and we had a reconsolidation in this area, proved to be a new accumulation zone, and it started another markup from there after a few weeks, and we made a new all-time high. And then we retraced from there, and that was the big one. That one went down 70%, or more than that, I think. We went all the way down to, that's the one that ended in the 16. We went all the way down to the teens. So yeah. So I don't see this hitting this area until after the second distribution, if we do have a second distribution. So we'll keep our eyes on this. But again, this is the overarching structure that we're monitoring. Now over here, I have Bitcoin on the micro on a 30-minute. And yeah, I circled this area here. Of course, this we've been talking about this. This is the area we've been rejected off the macro trend resistance line. That's the bottom area of this ending diagonal, of this ending channel up here at this 5 wave, which culminated with the UTAD. When we fell through the VWAP, We basically fell through the ice and we created a new bottom here, a smaller range between the support zone here and now the macro trend, which was the support inside this channel, now became resistance after it got flipped back. And so we bounced around in there. That's this line here. And this was this final rejection, the one that we just had yesterday that we've retraced from. And so I have it on the micro here. Of course, you could see, and we went over all this. I warned you guys about this bull trap, and because of the volume was so small coming out, the demand volume of such so much effort but such little result, marking up only 3%, and then heading towards this colossal resistance line. Yeah, I could see the writing on the wall. And then we rejected whole scale off it. Now, what's really cool and what I want to talk about in this video is focus on the fractal range analysis. Now, fractal range analysis is really neat. It's one of my favorite elements of technical analysis. You don't see it covered a lot, but it is really cool because it deals with fractals, and I just love fractals, guys. So I'm going to show you something. We see fractals all over. We see tops and we see bottoms. We see double bottoms. We see double tops, and if you zoom into them close enough, you'll begin to see those same patterns basically replicated within that structure of the very wave itself. So I found a really, really nice one at this double top, or rather this distribution that we just had yesterday, and I want to blow it up, but you can't see it really. It's like looking at a virion or a microbe with the naked eye. You can't see it, so you need a telescope. So when we do technical analysis, the way we increase our magnification is we go to a lower time frame. So for this, I'm going to take it to an even greater micro. We're going to go to the 3-minute, and I want to show you something. And this can give us insight on the final disposition of the price action for this distribution cycle. So, does this look familiar, guys? I hope it does. I labeled all the Wyckoff features, so just so you can see we have the PSY, the buying climax, the automatic rally, the secondary test between the buying climax and the upthrust, and then we come down again, forming this, I guess we'll call this the micro resistance and the micro trend for this little fractal range, which is almost a mirror image of what we just had. The sign of weakness in B, and then we came back up. We had the 3 drive here, although the UT on this one, on the macro, came up a little higher than that on the micro, but they're basically sister ranges. They're like twins. Here's Big Bob and here's Little Bob, And then we had the UTAD, the 3rd drive, the 5 wave, which marked down. And look, it even fell through the ice. Now I anchored the VWAP the same on the macro. I anchored it to the preliminary supply zone, and we anchored it on the preliminary supply zone in the micro as well. And it fell through the ice at precisely the same area right here on the 3rd drive where the VWAP went through the micro trend support line. See, here it was here was the macro trend support line, and then we had that new triangular expanding range underneath with the series of rejections off the trend resistance, and then we retraced. Now we get insight into how deep we could retrace. Now remember, what plays out in the micro eventually manifests in the macro. So keep that in mind. More or less to the same degree, to a very, very similar degree, although there are degrees of deviation here and there, obviously you can see, but to get the overarching gist of it, it's basically the same. So I'm going to get rid of this here, this circle, and you could see it in all its glory. Now, I didn't do all the liquidity voids on the micro that we've gone through already, because this thing just keeps retracing. We went back down through the structure of this rising wedge. This is the old, this is on the 30-minute. This is the 30-minute anchored VWAP, so pay no attention to that. But you see the series of rising wedges as we trace down, 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 down. And here's a support zone. This is this here. This is the automatic rally point where we hit. This is 92.5. So we hit 92.5 now. And we want to kind of get an idea if this is fixing to distribute further, redistribute, or maybe it's going to find a floor in this 92 area and maybe bounce up from here, or even reconsolidate here and fix to mark back up, making this in effect a new accumulation zone. We don't know yet what it's going to do. Although I do suspect, judging from the VSA, I mean, we've got a lot of supply still coming in, and it looks like it could be creating yet another rising wedge. Now, this could be a legit selling climax, but it really depends on the retracement of this little upthrust here. We don't see a heck of a lot of demand. I mean, that demand down here looks pretty meager to you, doesn't it? And the demand is decreasing as we go up. See, this is really important. This is why it's good to know volume spread analysis and to learn how to use it in conjunction with Elliott Wave, in conjunction with Wyckoff. So you got price action and volume together really is all you need to kind of get a good gist on what the price may be doing and where we may be going. And when you use it in conjunction with fractal range analysis like we're doing, you get an even greater boost. And so we see, of course, the price going up. This is a temporary selling climax here at the 92,000, which we know is which is a minor liquidity void. This was very likely. We've already hit it. So like we said, it's a done deal. But now we want to see if we're going to go down to liquidity void number 2, the PSY void. And so here we look and see what the price is doing at this key juncture. And it looks like, first of all, we look down here at demand, and demand is decreasing. Demand has been decreasing, albeit now this is on the 3-minute, but we're getting like a little biopsy. We're taking like a little skin graph of this to see if there's, if you could detect something. It's like going and they take a little sample of your saliva or something to see, or a swab to see if you're infected. This is what we're doing. We're just taking a swab of this whole distribution cycle to see if this distribution, as it were, is going to metastasize even further within this schematic. And we see what looks like another rising wedge taking place. And I say it could be a rising wedge because, again, demand is decreasing while the price is going up. So that's divergence. That's divergence in price action and volume. Now, if this were supply going up and supply going down, that would be strength for the bears, right? Because supply builds, like we see here. Supply building while the price goes down is bear strength. But price going up and demand going down, that's bull weakness. So we're seeing weakness now here for now. I mean, it's still kind of early to tell, but preliminary results so far, I'm still leaning to a distributional bias. And if we keep having enough of this and these wedges, these rising wedges start distributing like we saw back above here, then we could very well go to this next liquidity void area underneath the preliminary supply zone. And there, if we find ground like we did in 2021, we could see Bitcoin beginning to reconsolidate, beginning to accumulate, absorb supply, start absorbing supply again in the with the end game of marking back up, like we saw, in effect creating like a inverted head and shoulders, and then going back up, and then even going up and creating a new all-time high. That is something that is possible. That's what's already happened historically. We've seen that happen. And then we have another top like this somewhere up around, I don't know, I'd have to do the Fibonacci off the buying climax, the new buying climax, but $120, $130, $140,000, just depends on the FOMO at the time. And then after that, and then the UTAD on that one is going to be very steep, I imagine. If we don't retrace 50% on this one, which I don't think we're going to do. But who knows? I mean, these things are unpredictable, and that's why we track it from day to day. Hey, guys, if you get anything out of these videos, like, subscribe, stay safe in the markets. I track this stuff every day. It's all I do. I track not only Bitcoin, but all the altcoins, and I swing the altcoins when it's altcoin season. And so if you're just getting into trading, into the crypto market, or even if you're a trader and you've got some knowledge under your belt, check out, you may want to check out our Discord, our private Discord trading group. I keep it extremely affordable, but I mean, you get a bang for your buck more than what it's worth each month. I mean, you know, I've kept it at $20 since 2021 or 2020 or whenever I started the group. I used to just post my charts on TradingView, and I had almost 3,000 subscribers, and I just started getting messages all the time. Hey man, do you have a trading group? Do you have a trading group? Because my win rates were anywhere between 80 to 85%. And so you could check the chart histories yourself, by the way, if you don't believe me. And so they had asked me, why don't you start a trading group? Please start a trading group. Please start a trading group. And I said, all right. So I had my son. I don't know how to do any of this. I'm a Generation Xer. I don't know what I'm doing with as far as this stuff goes. So I had my son set up a Patreon account for me. We did Discord through Patreon to kind of differentiate from all the other signal groups, because I didn't want to create a signal group. Anyway, I'm going on and on, aren't I? Check out our Discord if you'd like to take your chart reading skills up another notch, and if you'd like to check out what I'll be swinging once altcoin season comes back in. And if you have any questions, you could always reach out to me. It's like having my own personal phone number. You could just contact me because it's live chat. And so anyway, but you could also profit immensely off these videos. And but you got to subscribe for that so you don't miss any more updates. All right, guys, we're going to look at Solana. We're going to look at Shiba Inu, XLM, XRP, Cardano, and Zcash. Zcash, and I think I might do some Chainlink, because Chainlink has been in the news. Chainlink is, I don't know, there's some buzz going on about Chainlink, so I need to look into that. But you know, I'm big on these finance coins. I'm big on the payment coins and the, you know, coins like XRP, XLM, you know, these sorts of coins that I believe are really going to play into the grand system of things. Because you know how I know this? Because the IRS, not the IRS, but who was going after them? Securities and Exchange Commission was going after these earlier last year, and then they kind of just backed off. And it was just very strange. They just backed off. And of course, the reason why they went after them was to create volatility, create FUD, get them to tank. Get them to get retail out, I believe, because they have a goal of accumulating. The insiders want to accumulate these things, so you and I aren't holding them when they go full on CBDC. So, but that's a whole other topic altogether. We'll get into that. In fact, you can look at a playlist that I made called Traumatized Tokens, where I go over several of those. I have Near Protocol on there, and Cody, and a few others. That they had their crosshairs on, and then just strangely, mysteriously, just backed off once they tanked. You know, they didn't pursue it in court. The lawsuits didn't go through. They weren't shut down. They just backed off, and it kind of fizzled out. So that should perk your antennas up that something's afoot. You know, I smell something, you know. So anyways, we're going to look at some of those coins now, especially once Bitcoin finds a bottom, begins reconsolidating, and the dominance drops, and then the altcoin dominance begins to rise up. These are coins that we want to start looking to take positions into, and I'm going to be posting a lot of these charts and information inside the Discord group. So might be something for you to look into. All right, guys, that's enough for me. I'm going to go. Talk to you guys later. Have a good day, and be safe in the markets. And of course, nothing I say on here is financial advice. So please don't misconstrue anything I'm saying as financial advice. This is just what I'm doing. You're welcome to piggyback what I do. All right, guys. Adios. Talk to you later. Bye-bye.